Xauusd of market structure series, and would like to look at market in a very quick way to see what uh, what price is doing, and the 30 minutes time frame. This enables you to jump in and jump out of the market while playing structure on a lower time frame. It doesn't hurt you. So we want to see key market areas and see if ACU is automatically giving up its demand status. You know, so we will use market structure on 30 minutes. We don't want to go too low due to the volatility we'll be having in a presidential election outcome. Here you have here as a resistance to a support structure. You have here as a support structure, 30 minutes support structure, and from the roof you have here a resistance structure, the breakout of a resistance structure, followed by a possible retest. So we are going to keep that in our mind. I like to pick that body on that rally, so that we catch the trade, which in the future we expect price to come back and retest a broken descending trend line, and as well a broken resistance roof will become a demand floor based on our strategy of demand and supply, which has been proven to be the only potent strategy in the market that addresses market based on demand and supply phase. Market is based on demand and supply. It doesn't matter the candlestick application on the chart pattern. No matter chart pattern, in every chart pattern there's a demand and supply phase in the chart pattern. In every chart pattern, there's a demand and supply phase in every chart pattern. And here we have double confluence. After market touch 2,725, it may be showing some promising bullish move. It will be showing some promising bullish move at that level. And when we look at it again, we have another descending support structure, which I will change the color to blue. So you can see when price returned back, it got rejected. And from the roof, we have a resistance structure. That resistance structure is acting as a dynamic resistance, which we want to see price break. You can see here from a supply perspective, we have this from a supply perspective, holding price from the roof. So on critical notes, we want to see if price breaks this roof. If price breaks this roof, then we are ready to go long. So it opens the floodgate of liquidity that buyers are no longer risk averse. But at the moment, price trading below this shows that buyers are risk averse, and everybody is taking precaution. Everybody is playing precaution based on the outcome of the United States election. So this is what we have on 30 minutes, and it's playing a perfect buy-sell scenario. A perfect buy-sell scenario, and we would like to see it. Play out the way we want. And you can see the structure here. You have a clean body close. Forget about the wicks. So as long as the candle body closes below this line, we are good on 30 minutes. If the structure body of a candle close above it, then we begin to see influx of liquidity. You can see here resistance structure, which I will call RS. That's RS structure, and on the bottom side is RS structure. These are all RS structure, and we have here as SR supply support become resistance and breakage structure. We have multiple resistance structures at the bottom where we watch out and see what price does. We have SR support become resistance and breakage structure. We have another support become resistance and breakage structure, and we have support become resistance and breakage structure. This structure came from a previous roof price action in the past. So what we see here is that the price has broken out. This is a breakout candle. We will have a breakout here, a breakout structure, BO, a breakout structure at this level. Price was descending and broke out from it, and you can see it. Price came here on retest. These are all retest candles. So as long as we continue to retest RT1, they return to retest a broken resistance structure, to retest a broken roof. So this becomes our demand floor. This is our new demand floor. This is our new demand floor. All these are supply roof and all these are retest. So the price return on multiple times to retest. So I don't know what it holds. If it's going back to break this structure, if it's going back to break this structure, that is fine. We don't have a problem with it breaking a roof. So if it decides to break a roof, and we have here a support structure, you can see that structure the way it was broken, starting from here. Let's take this out so it doesn't see it clearly. So see the structure here, where the structure was broken, and that was why we sold at 2,747. So if you are wondering why price sold at that level yesterday, so I just made it simple for you to see. So for those who do not understand the structure of market, so for you to see why price have sold at that level, you can see the reason why price sold there is on 30 minutes you have a structure. You have here support structure, then price came again, support structure, then breakout structure, multiple retests until we met a double confluence. The only reason we sold here was because we have a DC, ROS and also a DC. So when we have a resistance become support and breakout structure, and we have a double confluence, price action triggers. So price is playing in this contracting manner, and I think breakout is imminent. So at the moment, price might break out from the roof side and attempt to challenge 53, which is a break of a previous day high. However, gold is setting up for sale. The structure, we're having a lack of liquidity. So what we see here is I don't think it would be appropriate for price to break out here and we quickly jump into sell. But however, this becomes an area to watch because what we have a structure, we have a structure of resistance existing, a pending resistance structure that is already, holding price ransom. So what we see is if price breaks out from here, which I think might be unlikely because this descending structure is from our all-time high, where we had a breakout from a structure, retest 1, retest 2, price moving retest 3, and I don't know if the next candle might respect that and they pull down. But for me, if we break out from this structure, we want to see a retest so that price will be a breakout from a descending trend line and move up. So if that happens, I think it might open a long-term buy, which might likely see price move in this direction. So you might see price move in this direction. If that happens, you might see price move in this direction. This is where you have another roof, which I will call, let's change the color to purple. So we might have another roof at this level, another breakout structure we have here. You can see clearly how the structure was broken. You see here resistance structure, break of a resistance structure, the retest candle, returns here on support, break of a support structure, price returns here as resistance. So this becomes a new supply roof. So we have a supply roof at that level. So these are all intraday ideas where you can jump in and jump out Idea is to jump in and jump out without being hot. If you can jump in on a daily base, in and out, you will make a good profit to take care of your family. If you can jump in and jump out without being hot, you are good. A lot of traders learn to jump in and jump out. That's fine. If you can learn it appropriately in the right way using the structure of the market, that is the only thing that guarantees you to jump in and jump out without being caught. If you are caught by long-term analysis, then you are in trouble. So this is what we'll have on 30 minutes, and this is what we see, and this is what we believe. We believe in structure only, nothing else. No indicator. We do not believe in indicators. So price is coming for retest into. I think what the market will do is the worst it can do is to break out from the blue descending trend line (DTL). So if that happens, then you see price to retest like it did before. Like you see here, break out from this place, descending trend line. When price broke out, retest one, retest two, retest three. So the worst that can happen, it comes here and retest it and go down, or it will come from here and just smash the price down. So if it goes here and start to fall, that gives you a new edge. That will give you a new edge to break this floor. Then come down here again and test 23. Maybe at this time, it might not have the right liquidity to break this structure. Then go up to test 59 to break previous day, break Monday, and go back to test Friday close. You know, that might be the case. That might be the case. We have a touch here on Friday, so price might come back to test that high, that Friday price action. So it's possible that market is heading here and it's rejecting 39, it's rejecting 40, it's rejecting it. So this might be the case because already you see market has already created a structure. You see the structure. So let me make it clearly the two structures market have created. So you can look at it, look at the two blue structures. One is the floor, one is the roof. So now if price gets to the roof, it sells down to the floor. It gets to the roof, it sells down to the floor. It gets to the roof, sells down to the floor. And we have a break of structure from here, a break of a support structure, retest one, retest two, retest three. So if price wants to continue moving, it has to break out from the descending trend line, then use it as a support structure and move up to align with where you already have another support structure. After the bearish impulse stopped here, found support here. The market uptrend found another support, giving us an ascending trend line, ATL. So that ATL is a midterm 30 minutes ascending trend line, and it was respected and price consolidated on that roof before meeting a double confluence ROSDC, and price has dropped based on confluence. When an ascending trend line meets a descending trend line, it's a gunshot, boom, drop price to 25, 2,725, and price found support. We found support again on double confluence. Another ascending trend line meet a descending trend line. Another boom, boom. So this is how market works. The strategy works on confluence. The more confluence you have, the higher your probability that market is about to move. That is why this strategy you do not need indicator, because the moment you have two or three confluence, it's more active than any indicator you can think. Confluence are real market reaction. They represent the motion of buyers and sellers. It's like four people bearing witness against somebody. If four people gang up and bear witness against you, you are in trouble. Whether you are innocent or not, you are in big trouble. So that's what that means. So the descending trend line and ascending trend line is bearing witness that buyers are going to buy here, and they actually bought. That was why they bought here. If you have a descending trend line, we have a breaker from the descending trend line, retest one, retest two, price coming on retest three. We have an ascending support structure, a dynamic demand floor, demand one, demand two. On technical, price is turn on demand three. It's a buy. So this could be a rally. Here could be a point of rally right now. Price might anchor on this impulse leg now and begin to shoot up. It is possible that price can use this place now, 2,725 as an annoying ground, and they begin to shoot up, break this structure and begin to go up, 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 up. So this is possible. This is possible. And they can from here, when they touch the blue roof, yes, the blue supply roof and drop the price. So this is what we have seen over time. We have seen this over time, over many times, and it's all the same, and it ends up in the same manner. So let's see how it plays. Let's see how it plays, and let's see how it plays. And in the worst case scenario, what we expect here that will happen. We have a very good structure here. Where price can go. Price can dip below 2,700. Can dip below 2,700 by we have a small structure here. We have here support structure. So we can dip to this level. This is also another valley structure we have here. This is also another valley structure. This is another structure. Support structure, support structure, support structure. Another price here, support structure. Price can dip down and come here, 2,712. So I will change the color to black. So price can come there. Let me take this bubble away because this bubble is blocking it so that you get to see what price has done there. You can see it exactly came here. So price can come down here and react. Yes, it is 100% possible based on our knowledge of market structure and how price movements. So take time to study price movement. Everything is not trend line, everything is not support and resistance. You follow the structure of the market. The market will follow structure, and at the end of the day, the market is well calibrated. They know where to sell and they know where to buy. So it's just like a rich man. A rich man knows when he's going to buy an asset. He buys an asset when he thinks it's cheap and sells when he thinks he has made enough profit. This is how market makers think. So when you jump in as a retail trader, you want to jump in and jump out. You have to think like an investor. Are you buying low? Are you selling high?